Traders, welcome back to another Relentless recap. As you guys are tuning in, be sure to hit that thumbs up, and if you're a new viewer, consider subscribing as you watch throughout the video. So today we're going to be talking about how I was able to come into the financial markets here and walk away with over $2,000 in just about 1 hour of trading. Relentless, how did you get it done? How did you do it? Again, guys, the common question that you usually will get every day is, hey, where do I buy? Where do I sell? And how do I manage my risk? First and foremost, I'm going to start by saying, guys, you have to treat trading like a business. Day trading is a business. It's a career. It's a passion like any other field and sector out there. Healthcare, hospitals, doctors. With every career, with every business, there is a learning curve. There is a point in time and a period in time that you must go through and develop the necessary skills in order to become experienced and, of course, competent. Guys, I will start by saying, if you are not consistently making money, you should trade in a simulator or with very small size. Risk money. Day trading is hard. Day trading is risky, just like any other business out there, any other career. There are risks involved. And ask yourself the question, would you want a surgeon who had just walked into the hospital yesterday with no background, no certification to perform open heart surgery on you? The answer is an overwhelming no. And so, as a CEO, as the owner of your own business here, are you capable? Look at yourself, judge yourself from a third person's point of view. Are you capable of running this company? And if you had shareholders, would they vote you out of the seat of CEO? Are you running your business properly? Are you efficient? These are the questions we must ask ourselves. And so, hence our disclaimer. So, going back to, where do we buy? Where do we sell? How do we get started? How do we learn? It comes down to education, guys. And whether you follow me or someone else, make sure that the person that you're following is credible. Merciless Markets. This is the day trading course that I have that is built from the strategy that I have. And, we here at Merciless Markets are so engaging. We're so involved that we are even going to fly out one lucky student. One lucky student will be flown out to Las Vegas this upcoming November for a day trading conference, seminar style conference called Traders for a Cause. All expenses covered by yours truly, Relentless Trader. So if you are interested in getting started to learn how to trade, be sure to check out MMU. This is where we go over all the, and I say we because there's Marcelo and myself, two six-figure traders. This is where we go over all of the strategy that we trade, and it's very fast-paced scalping, momentum style. All right. Check out the gold option. And by the way, in order to be able to come to Vegas with us, you have to be a gold member. Right. So today we're going to talk about the gold member here, and specifically, right? Gold members are yearly members, annual, they pay annually, and they're here for a longer period. Silver members, the 3-month access. Guys, you get the course itself, you get ongoing lectures, you get Q&As, you get archives from Marcelo, myself, a watch list, a trade plan, low latency streaming, the trading chat room and inner circle chat, one-on-one mentorship, and lifetime access to the chat. All right. So check out our curriculum and get started today. Coupon code Vegas. Code Vegas for a chance to win a trip to Vegas. This is real, guys. I know this might not even, pinch yourself. Are you dreaming, right? For a chance to win a trip to Las Vegas. And I'm going to make a separate video on this just because of how crazy it is. You guys can use coupon code Vegas for 40% off and, potentially win a chance. All right. And if you are an existent gold member, you'll automatically be entered, of course. So this is where you can go to learn step by step how to manage risk and how to trade and give yourselves a chance. We don't guarantee profitability because you, the individual, are the variable. You still have to put in the work, the time, and you know the effort, right? You can go to university, there's someone in your class that still fails, so you have to put in the time, actively try to be better to give yourselves a fighting chance, because day trading is hard. So now I'll show you guys a few of the chart patterns that I go over in the course that I've utilized today to give myself a chance at making some profits. So we're going to start off on the right hand side of the screen, which is the 1 minute chart. All right, the 1 minute time frame. For those of you who are very new, maybe this is your first time clicking on a video like this, these candlesticks, this is the language of how the market is interpreted, right? So each candlestick is telling a story. And so with stock YELL, I'm watching at this one. It was in play because yesterday it made a move. It made a move yesterday, gave some really good opportunities. And so today, again, I'm keeping an eye on it. And, we started off by giving a small pullback and then some continuation. So the stock opens up, it goes from 167 to a high of 180, and then it pulls back to 169 and then shoots back up. So as the candle makes a new high over 175, I'm in, we get to 184. It comes back down again, and I repeat the same pattern. This is twice now in a row, 1 and then 2. This time it curls up quickly, 180, a low of 170, it gets back now to 190. And from 190, it pushes all the way to 224. Absolutely incredible, guys. Absolutely incredible. It went up so fast, so quickly, that it ended up getting halted. A circuit breaker halt is the proper terminology. All right. It went into a circuit breaker halt. For those of you who are not familiar with that term, feel free to pause the video right now, type it in on Google. A circuit breaker halt. It occurred here for 5 minutes. Stock resumes, it dips, and it rips. And Relentless Trader even has an entry in this situation. Chapter 24. Check out chapter 24 of halt resumptions. That is the setup that I traded right here. So when the stock opens up, and we can, I'm trying not to show a lot of archives. I'll show the live trading from this example here. The stock opens up, and I want to see it pull back. In fact, you know what? We'll keep it for the students. The stock pulls back and then surges up. And when that happens, that's where an entry is provided. And of course, I'm also using an instrument called level 2, which is this instrument right here, which allows me to see price fluctuations, right? It allows me to see where live orders are coming through of people who are buying and selling. And because it's an ongoing order flow, it acts as a lower time frame, even lower than the 1 minute chart, because time is progressing and data is coming through live. So assume I'm looking at a stock right now, and then 10 seconds passes, I will be able to interpret the data over the last 10 seconds and be able to see an image in my head of what the stock is looking like, despite not looking at an actual candlestick. Does that make sense? I think it does. So the level 2 is it can be a 1 second chart, 10 seconds, 15 seconds, 30 seconds, right? Because data is coming through and time is passing. And so we dip, we rip, it pulls back, and it surges up. And right here, it got very difficult to trade as it came into this pink line, which is our 200 EMA. We even have a chapter dedicated to the 200 EMA and its significance when it comes to support and resistance. The stock initially has a hard time breaking above this level. It finally does get above, and then it starts to act as support. So right here, rejects, having a hard time, but it's holding up. People who are in earlier are still holding their positions, and so it inches up, it gets above, it does a sharp drop, it holds, and it surges up. And I ended up missing this trade here because sometimes I'm not extremely confident buying below the 200 EMA, but in this situation it worked out very well, very, very well, and continued pushing, and right here making even new highs. So this stock, guys, was extremely strong. And so these were some of the earlier entries that I took. Even some scalp trades in these candles as it tried to push higher. And then as we zoom out here and we come over, we'll see that this thing went all the way up to 330 before really pulling back. So a small wedge right here, you know, ascending support, high, low, what's that? Higher lows, right? Higher lows. We get tighter into this wedge, and then there's a squeeze, right? So we get tighter into this wedge right here. And so the range, look at the range, it's bigger, and then it starts to get tight, narrow, it gets narrow, and then boom, right here it's up or down. Once we go to the upside, I'm back in again, and I'm in, selling, selling, selling into the highs. So that's how this one ultimately played out. YELL. Very good stock, very good price action overall. I was in a meeting in this area here, and I ultimately missed the bulk of this move, but I caught the last 2 minutes or so in this range and was able to make about 400 bucks, which did push me over the 2K mark today. But the same old. You know, there's a flag here, a bit of a bigger flag. We call it a wedge, and from here, it rips through, pushes higher, and goes all the way to $5. And this was from $4, so this went up $1 here. I would have loved to trade this entire thing, but you know, sometimes opportunity cost. Time that you're spending doing one thing is time that you're not spending doing something else. So, for some motivation, you know, not everyone is green today. There are people out there who, you know, had a hard time, who might be break even, who might be red. Some of you guys who might be max loss. Some of you guys might have had a huge red day. But, you know, it all comes down to one thing: risk management, guys. Any day where you properly and successfully manage risk is a day that you should be proud of. Now, with that being said, how do you manage risk? How do you go about deciding, you know, when to cut your trade, where to cut your trade, and when to hold longer, when to buy back, when to sell, all these different things. Guys, that's what we teach in the course. That's what we teach in the course. But what I could say for the people who might want some free content, it comes down to first the strategy that you're trading, and you have to understand the context of what you're trading. You know, there's a million strategies out there, and I'll talk about the two strategies that I trade within the, and I don't want to make this sound specific because, you know, there's multiple things that I look for all the time, right? Trading is multitasking. But in terms of the two main focus points, I'm either buying a stock high or I'm buying a stock low. I'm either buying a stock high or I'm either buying a stock low, high or low. When I'm buying a stock high, I'm watching for a breakout trade. When I'm buying a stock low, I'm watching for a support trade. And there's two psychologies there. In a breakout trade, I want to be out quickly because I'm buying at the very highest point, hoping for the stock to go higher. Let's pull up the charting right here. Around 10:06 a.m., this stock looks like it's going to continue to go higher from a high of 324, maybe to 350. Let's say we have reasons to believe the stock can get all the way up here at 350, right? In the moment, none of us can read the future. In the moment, we have to go off of our real-time indicators: volume, price action, moving averages, everything that we have at our disposals, right? So in the moment, if I'm buying this stock at 330 and I recognize, hey, it's not continuing to go right away, then I want to be selling because I'm buying at the very highest point. There is no guarantee that this continues going. Despite, even if I have intuition or if there's some indicator telling me it should go, it might not go. There's always that chance, right? And so if it's not going, I want to react to what the market is telling me in the moment, which is, hey, there's some short-term weakness, sell this position, you can always get back in. And that's also another good thing about free commissions. There is no reason to hold a trade longer than we need to. even with commissions, with discipline, because you know even commissions doesn't change that. With discipline, if the strategy is saying in or out, whether there's commissions or not, it's still in or out, right? Doesn't matter. It doesn't matter if you're in the sim, live account, commission broker. By the strategy is saying, hey, this is an area where we need to get in. This is an area where the stock no longer looks good and we need to get out. We must follow it. So it comes down to strategy. What strategies are you guys trading? I know not everyone trades the small cap. Some of you guys are just watching on, right? So, you know, whatever strategy that you're trading, make sure it's a credible strategy. Make sure the person who is sharing that strategy knows what they're doing and that they're a good example themselves. All right. So that's how the breakouts trade go for me. I'm in or I'm out if it's not going. Once I'm in, the stock needs to be going. If a stock is not going, I'm back out. Now, at the lows is a different psychology. Because I'm buying at support, there is a chance that the stock might not go back up immediately. Because this is the stock market, nothing is 100%. There's no golden rule saying every time the stock comes to support, it'll go back up in an instant. There are days that might happen, but there are also days where the stock might linger and then go back up. And so for me, when I'm buying at the lows or a support trade, I'm buying in a level or a range where I feel like the stock should eventually over time be able to curl back up. You know, in this case, let's say I buy at 292, right? Um, 292, and let's utilize this candle over here. So 292 was the low. We then came down to a low of 283, so we pulled back, you know, a little 10, about 10 cents below the level, but we start to curl back up. So let's say I'm watching at this, it's coming down, it flushes down, I'm watching. If I recognize that this is bouncing back through the level, in this case a breakdown, and it reclaims the level, let's say I'm buying this at 290, 293, whatever, well, I'll have, you know, I'll have a stop in my mind, which is the low of the candlestick. So let's say I'm in at 90. Hey, if this thing gets back down below 83, it means it's a little too weak because we've already broken the previous low at 92, right? But this gives me a risk. This gives me an area where I can say if the stock does not hold, I'm back out. And so this trade is a trade I could be in longer, and it does curl back up. We go from 83 to a high of 310. From 83 all the way back to a high of 310. Hey, that's a decent range. That's a pretty decent range. That's 27 cents. You can make some money in there. So, you know, I have time on my side in a support trade. But in the event that the stock fails and comes back down right away, or even in a few minutes, I know where I need to get out. Because at this point, the stock is no longer strong. It's no longer respecting the hypothesis and thesis that I had. So it's now showing me weakness. So when you understand the logic of the strategy that you're trading, it'll be easier to respect and understand, you know, it'll be easier to respect the rules of engagement, and it'll be easier to, you know, recognize where to buy and where to sell. So it does come, a lot of this does come down to strategy and how you're trading. And for anybody who do end up taking the Merciless course, you have to be willing to embrace the course fully. If you have prior knowledge, prior information somewhere else from, you know, maybe a different schooling or teaching, or just from what you've learned in the past, what we present is at face value. You have to take it for what it is and, you know, try and do it as close as possible as you can, because trading, of course, is delicate. And, you know, when you change things up, it can change the strategy. And not unless or until you are very proficient and efficient would you want to implement major changes. All right. So change is always good because change helps you to grow, but you have to be careful with how you change, or else you can digress here in this space because it's so delicate, the strategy. All right. So trading is hard. You know, a reminder here to end it off. Trading is hard. It always was. It always will be. Remember that trading is also risky. A lot of people are struggling. A lot of people are having a hard time if you're not consistent trading a simulator. At the very least, use risk money. And you know, remember not to copy trade. Copy trading is a disaster. You have to learn how to trade. You have to go through, some sort of learning curve for yourself, and you know, gain the experience, become competent. All right. So, lastly, remember that we do not invest money for our subscribers. Be careful of the fake accounts out there. A lot of impersonators, a lot of spam, a lot of scammers. We will never ask you to contact us using Telegram, WhatsApp. We will never talk about mirror trading, options trading, and under the context of investing money for subscribers. So be very careful. I will never ask you to send me money. I will never ask you to click on a weird link. I'll never message you first. People are usually messaging me. I will never message you first. All right, so be careful, stay safe. And this is on all social medias. This is all over the internet. TikTok, Instagram, Facebook, YouTube comments, everywhere. So be safe out there. It's been Relentless Trader. Hit that thumbs up, subscribe to the channel, and I will catch you guys later. All right, stay safe, stay green. I am signing out.